Hi, Tori Agler with your July metals market update for 2025. And I hope your summer has been very smooth and you're getting some rest and relaxation in. As always, we'll go into some numbers, but I also want to make sure that you can see the screen and make sure that we're able to update you as to what we're seeing transpire in the markets visually and not just listening to me droll on. So all that being said, it's been relatively flat with gold. What I did with this first image was get all four of the metals onto one chart so you can kind of see how they continue to climb into the month of July and faded at the end. Despite the fade, you had two of them, silver and palladium, actually finished up for the month, but the others actually finished down. So gold just barely. You'll see this red line that is just moving directly sideways for the entire month, ends up being something that, relatively unchanged for the month, down 0.1%. Silver, not a whole lot better. This shows up 3.9. It was actually up about 2% for the month and 1.9% or so. But again, that's despite this decline into the end. So right at the last couple of trading days, gold ended up dropping about 3%, and silver ended up dropping about 5% into the monthly close. So other than that, we would have finished up. And since that period of time, they both have rebounded, and we're back into the resumption of a climb. As far as the other two industrial metals with platinum and palladium, you'll see the top one is palladium. It had a very solid month, despite again fading down about 7.5% in the final number of days. It still finished up nicely, up 7.7% for the month, despite what this is showing. And then platinum, similarly, it had the biggest drop. It was down over 8% in the last couple of trading days and ended up finishing down 2.7% for the month of July. So that's just the monthly charts. If we look at the year to date, it's a lot more of an enjoyable image. Again, you'll see, look at this chopping sideways of gold really since hitting that high in April. I mean, we've kind of hit our head pretty close to that 3,500 level mark in gold, but for the most part, we've been chopping sideways as uncertainty has calmed in the markets, certainly as a result of tariff concerns and looking and seeing what the dollar has done. It's gotten somewhat stable after a precipitous decline, which we'll get into in a little bit. But you'll see these white industrial metals, because of GDP expansion, because of a resumption of inflation, despite some little retracements and pause in that latter point, you've seen the white metals, these industrial metals, really have a rally. And year to date, I mean, it's pretty remarkable. Gold had a much better start, but it's still up 25% year to date, 25.4. Silver's up 26.5%, darn near really 27% year to date, just in 2025. Platinum up over 43%, palladium up 28.9%. This is showing 34, but that's just because it's incorporating early trading days in August, since I'm recording on Monday, August 4th. All right, so very encouraging charts. Because they have resumed their climb, it doesn't look like an interruption in the trend, and we'll see. And I really do feel like we're just not going to see that summer lows that we tend to normally see. If we did, we hit it right here towards the end of in gold towards the end of last week on July 30th, 29th and 30th. And that may have been our dip to buy. We'll see how the timing ends up working out. So zooming in on the gold chart here, I wanted to show just the year-to-date chart with the moving averages. So you'll see when gold is really taken off, how it separates from the green line, which is 20-day moving average. The blue line is the 50-day. And now we are seeing them cross. It's gotten so flat that they're just touching, and gold is chopping sideways along those moving averages. Meanwhile, it's pulling the longer 200-day moving average, and we're finally essentially at $3,000 for the 200-day moving average. And those are all important for floors. You'll see that it serves as somewhat of a guide and support after a while. Similarly, silver, with its strong run, we're up we were up above the 20-day, and you'll tend to cross back and forth on the 20-day far more frequently. But you'll see we almost came down and pulled back to the 50-day, and then it's since reversed. But that 200-day is already up at $33 an ounce, which is incredible because that's a much higher figure than we had even seen for 13 years in the silver price. So fun activity, but platinum is the one that I was nervous about, and I sent out the email to any of you platinum owners saying you may want to consider liquidating here in the short term, because when we got up to that 1,475, you see how far away we were in these spikes from that 20-day and 50-day moving average. Anytime you see that separation, should make you a little bit nervous. It's eventually going to come back down and touch a moving average or two, which is what we've seen play out. But still very bullish activity, and looking for a resumption there because of supply and demand. We're in our 6th straight year of platinum undersupply in terms of mining production, with ramped up industrial production, with the exception of just in the last month, we're seeing diesel engines demand decline just a little bit in platinum. And then palladium, very, very similar. Again, has touched and crossed through the 20-day moving average closer to the 50-day. But it's finally coming to life. It is cheaper than platinum. It was about 3 times the price. And so it's fun to see that, well, really about 1.5 times the price of platinum. So it's fun to see it fall and get cheaper and make up a little bit of ground. The big story for the month of July, though, you'll see here, is that the dollar right at the end, kind of in this downward trend, we've seen this multi-month decline in the US dollar index, down even as high, as low as below 97 on the dollar index. Well, it's had a little bit of a breakout, and that breakout certainly corresponds with the gold price decline that we saw. There's an almost inverse, correlation to the gold price and the US dollar. So to me, this is interesting. We'll see what the $100 figure brings, because if we zoom that out a little bit, yes, we're in this long-term declining trend, for the year really, which corresponds with the gold price. But you'll see here for, a few years, we kind of chopped sideways in this channel between 100 and 106. So when we broke below that, that meant that it should have a precipitous fall, which it did. And we'll see where it ends up going. But we've had this little breakout. You bump your head against what was the previous floor, has now become a ceiling around 100. And then we'll see if that trend continues. What's going to drive the dollar down? It's going to be interest rate policy, certainly weak dollar policy like spending, increasing the debt, decreasing interest rates. That's all weak dollar policy. So we'll see what ends up transpiring as predictive fashion for what the gold price is going to do oppositely. All right, and here's the gold to silver ratio. So that's been the story of the summer. We've seen this steady decline as silver has outperformed gold. It's driven the ratio down. We got as low as almost to 86, again, coming off of 104 and change. So that high, this is when we were buying silver like crazy, and since then silver has outperformed. And then you'll see this just short-term little spike back up where gold has outperformed. That ratio's gone from about 86 to 90, back up 4 points. And that's going to be fun to see which direction we head from there. But we're really hoping for a continuation of this decline, because that's where we're going to sell the silver and move into gold. The silver that we bought north of 100, we'll be able to pick up free ounces of gold on just that ratio. So that's it for a brief monthly update for July 2025. As always, please call us at 866-211-8972 if we can answer any questions, or if you want to walk through your own portfolio. We love to spend 15 to 30 minutes with you, just doing a deeper dive and helping you kind of structure your portfolio or get updated for the midpoint of the year and strategize for the closing of the year. Tori@mcilvaney.com is the best email address. And then the website, silvergoldinsights.com, will give you some helpful videos that I've put together just to kind of show you talking points on, maybe the compounding out strategies, the justifications for gold, things like storage and ratio trading, premium swapping, that sort of thing. So as always, we appreciate you guys. Deanna and Eric and I just value any opportunity to speak or email with you and to be of assistance. So here's to a blessed August of 2025. Thanks.